board Sudeep Shah, Head of Technical and Derivative Research Desk at SBI Securities. Sudeep, hi, good morning. Thanks so much for joining us. Give us an idea of what the broader markets are looking like on the charts today, because it's been a mixed performance, a mixed show coming in from both of these, the mid-cap and the small-cap indices. They're not doing all that much over the year. However, they have managed to outperform what the Nifty has done. What's the outlook going ahead, and do you believe next year is going to be the year of the broader markets, or do you think the benchmarks are going to take over?
Yeah, good morning. If we see Nifty and Bank Nifty, firstly, both post that high few months back, they've slid into a period of consolidation, and we are seeing some kind of a subdued activity there. Lower top, lower bottom formations are happening, and similar structure is even visible on the Nifty midcap now, having run up. So almost from levels of 40,000 to 60,000. Now, in the last several weeks, we are seeing that fatigue getting. It is like in the last few weeks, we have seen these indices slid into a period of consolidation. And what we are seeing here, one more thing is that selective midcaps are moving in. The midcaps, specifically, say from the railways, from the defense, which were the darlings of the market, they have now, there we are seeing some kind of a selling pressure. So we feel that, yes, for the first few months of the coming year, 2025, it would be still large caps, which would be preferred choices, and selective mid caps where there is outperformance that is visible, which are beating the benchmark. Those mid caps would be preferred.
Okay, that's the take coming in right now on what the market construct is looking like. The implied...
Deep, I wanted your take regarding two packs. IT, of course, earnings round the corner, and there's some positive news coming in from the US as well, with Donald Trump not being too against the H-1B visas for now. And the other one is chemicals. It has been, under pressure. And of course, there's negative news flow today on a couple of companies. Both Alkyl Amines and Gujarat Fluoro have seen some, unfortunate accidents at their locations as well. Within chemicals, what looks good, and within IT, what would you prefer?
Yeah, so see, if we see the IT index has been one of the star performers of the last 6 months. And in the last 1 week, we have seen some kind of profit booking from higher levels. But just keeping that last 1 week or 1.5 weeks trading action away, this index by and large has outperformed. And we feel that going into the new year also, we would see some kind of a decent performance from the IT space. Here, we would like to go with the large caps now, specifically if we see HCL Tech, Infosys. Both these stocks have outperformed their peers within the large cap space. And HCL Tech, we feel from here could head up to 2000, 2050 levels in the next couple of months. Infosys, by and large, if you see the levels here, from lower levels on even on Wednesday, on Tuesday, we've seen a decent reversal from 1830, 1850 levels. And till the time this zone holds, Infosys also could head up to 2030, 2050 levels on the upside. Now, regarding chemicals, this space in between had shown some kind of a promise, some kind of a reversal was witnessed, but on the larger degree charts, most of these stocks are still in a downtrend. So we feel even from the current levels, there is no sign of a reversal. And speaking about alkyl amines, this stock could head up to 1600, 1630 levels on the upside. 1930 would act as a resistance. Gujarat Fluoro, now here the charts have been still better, and we feel Gujarat Fluoro maybe post a weak opening because of this unfortunate event. 4250, 4280 could act as a strong support until this holds. There could be once again a reversal back to 4500, 4550. So out of both these stocks, Gujarat Fluoro would still remain a preferred company to invest into on lower levels.
What's the view on the charts of BKG as well as Narayana Health, both in focus on account of news flow? BKG now getting into bakery products, so maybe tough competition for the likes of Britannia, etc. But that stock actually has been on an uptrend of late. And the other one, of course, as I talked about, is Narayana Health, because they've got the insurance clearance in Cayman.
Yeah, so see, Bikaji, if you see in the since October, the stock has been in some kind of a downtrend consolidation, if we may say. But the overall structure of the chart from the last 1.5 to 2 years has been positive. So, post that big move from 300, 350 levels to 1,000, we have seen some kind of a throwback, say 15-20% from higher levels. So, the stock now is approaching its important support zone, which is closer to 725, 730. This is the zone where even the 200-day moving average is placed, and this 200 DMA has not been breached since April 2024. So maybe a retest and a subsequent follow-up buying on the upside. We feel that the correction is coming to an end over here, and 725, 730 zone will act as a strong support on this counter. Uh, the second counter, Narayana has Rudralaya. Here we feel that the stock post that big move, say from 800, 900 levels from June 2023 right up to 1400, has been consolidating since last 8-9 months between this 1200 to 1350 band. And every time the stock is say facing selling pressure within this range, also the volumes are lower, and the subsequent buying from the lower zones, the volumes have been much higher than the average numbers. So we feel that steadily the stock could break out towards the 1550, 1600 levels in the coming few months. And overall, the support zone now lies around 1230, 1220 on the downside. And above 1330, the stock is headed up to 1550, 1570 levels on the upside.
View on Bikaji as well as Narayana Health. Nureen?
What about your mid-cap strategies?
There are a couple of names which we are bullish on, and both are from the pharma space. Now, the first one is Laurus Labs. Here we have seen the stock had moved in the last couple of months, 450, 460 or to 590. Thereafter, it slid into a period of consolidation for the major part of December. And on Friday, a strong action on the upside was visible. So we feel that we should go with the trend here, and the stock could head up to 610, 630 levels on the upside, and can be bought with a stop loss at 560. The second stock is Ipcala. Now here there has been a strong breakout post the original trend being quite positive. The charts on the weekly as well as the monthly time frame showing quite a lot of bullishness. The stock split into a period of consolidation right from mid October till date. And on Friday, we have seen a decent breakout on the upside, backed with volumes and a rise in open interest. So here we feel this could be bought with a stop loss of 1600 on the downside. And the first target on the upside could be 1700, followed by 1725 levels.
Watching out for those stocks. For now, the pre-open rate.
The stock on the charts, because last 1 month, last 6 months, the stock has absolutely not done anything. In fact, last 6 months, a slight bit of a negative return is what the stock has given. What's your view going ahead? And do you agree with this 5150 that the brokerage outlook is giving us?
Yeah, see, if you look at the long-term trend here in KEI, the stock has delivered super returns. Now, solid returns have been generated by the stock. It was around 1,000 rupees back in January, February 2022, and 3 years. The stock has almost touched 4,800, 4,900 in June 2024. Last 6 months, if you see, it has led into a period of consolidation. The stock is not even down by, say, more than 10-12% from the higher levels. And this and post this big rise, this consolidation may still continue, I feel, for the next few months also. But overall, the zone of 4,000, 4,100 would act as a strong support. Say fundamentally also, there's nothing wrong with the company. The company is delivering a solid set of Q-on-Q numbers. And we feel that 4,000, 4,100 could act as a strong base, and the stock could head up to 5,100 and maybe even higher than that, because post the consolidation breakout, which could be above 45, 50, 4,600 levels, there could be another 15-20% move on the upside based on the consolidation pattern targets. So I feel yes, 5,100 could be the bare minimum levels that the stock could achieve once 45, 50, 45, 30 levels are crossed.
What's your trade?
Uh, I feel Blue Star looks good at current levels. On the weekly charts, the stock has shown a good reversal in the last week, and we feel overall 2010 levels should hold out as a stop loss, and 2250, 2300 levels is what we are eyeing in the next couple of weeks here.
If you like this video, then like, share and subscribe to ET Now.